All right, good morning, everybody. It is Thursday, January 27th, 2022, and we're going to get started here with our pre-market analysis on the S&P 500 futures market. Yesterday was pretty awesome. So, despite it being a fairly kind of sideways, funky market, the market basically did what we were looking for it to do. And so, hopefully, this morning we have a equally successful pre-market. But let's just go through yesterday really quickly here. So yesterday we came into the market and we noticed that we were breaking above the previous daily high. So if you look, if I could just really quickly explain why we're looking at this, I want to jump up to the daily range. And so as intraday traders, remember we're trading within the day, right? So the previous daily price action is going to be really relevant to, in my opinion, to our trading. So we've got the high from the day before in red, the low from the day before in green, and then 50% of that level in magenta here. And this is just giving us a basic general orientation of where we are in respect to yesterday's price action. And it seems to be a pretty relevant metric. So usually when we're trading within the previous daily range, it can be, fairly ambivalent, back and forth and choppy. And when we start breaking out from that previous daily range to the upside or the downside, it's our first clue for the potential for that change in trend, right? So that's why we're looking at that previous daily range, because we're trading within it as intraday traders, right? So let's go back here. We have our previous daily high from yesterday up at 4406.75. We were breaching through that coming into the open. So we had a little bit of a clue that maybe we were going to kind of break out from the last day or two of this sideways chop after the huge sell-off from the last couple days, last couple weeks. So we broke out and we said because of that, we were expecting a potential for a chug higher. However, there were two levels above us that we were looking at. The first level you see here, we've got an eye level at 29.50 and then another one at 31.75. That little pocket right there coming into the open was our first expected area of resistance. And if you go back to a shorter time frame, you'll see what happened is we came right to 29.50, sold off to the tick from there. I actually took a short from there and got a nice 15-point pullback from there. Almost right out of about a half hour within that first half hour of the open. So we got the pullback right off that level, and then the bulls jumped in and peaked right above it, and then that was it. We got the failure from there. So that was our first expected area of resistance. We said getting through that would be our first good clue for the bulls, and there you go. They got the rejection and it pulled back. The next level we were watching for resistance was 44, 45, 50 up top here. On the other side of things, down below us, if we did reject from the 44.29 area, we were looking at this little shaded zone, and it might be hard to see. Let me see if I could zoom in just a bit. This shaded zone between this orange line and this blue line here was our next expected area if the price was going to pull back for that larger bounce, or at least an expectation for some interaction there. Remember, we don't know what's going to happen next. All we have are certain areas in the market that make sense for there to be some type of bounce or some type of rejection from the upside. So we came down. Look at where we bounced, just about 3 or 4 ticks in front of our level that we've had on the charts for, I don't know, probably months now. And went ahead and came out, and look at what the high of the day was. The high of the day was 46.25. So we literally probed right into our next expected area of resistance and then sold off from there. And then the low of the day was our eye level down here at 42.92.50. It bounced just about 5 or 6 ticks in front of that, right? So that was yesterday. It couldn't have worked out any better. Anyone who was in our trade room saw that I got a couple 50-point trades, a couple 30-point trades. It was an insane day for me. I was pretty frisky with things. And so that brings us into the overnight session. And there's one last thing I want to talk about before we get into this morning. And that is we had this nice little push coming off of that, again, right around that eye level at the end of the day there. Bounced out. We pulled back right into just about that 50% retrace, right? So we talk about this every day. fib leg from the low to the high, pull back right into the 38 to the 50, and look at where we found resistance almost to the tick up at the 27% extension, which also was our new magenta line, our new power level going into the Globex session there. That was 50% of the previous daily range. So came right into that, failed from there, and that's where we are this morning. We pulled back, and now we're attempting to come back up and break out from the highs of the overnight session. And it looks like in the last few minutes here, we have successfully just gotten through that area. And interestingly enough, look at where we just found rejection right off our eye level here at 43.80 quarter. I can't believe how well these levels work. And if you just zoom back and look at these levels that we deal with, we are using prediction points that also work very, very well. But these other lines, these blue lines you see kind of strewn across here, are our eye levels. And again, we're right up to one and finding rejection at the moment. And the low of the overnight session was just a few ticks in front of our major eye level down here at 42.62. So this stuff is just, it blows me away every morning. I can't even believe how well these levels work. And again, the prediction points we're using in conjunction with these other levels, and it's basically, this is my holy grail. This stuff right here, using a little bit of divergence to orient myself, is absolutely amazing. So let's get into today. I'm just really proud of what happened yesterday and how well all these levels are working here. Let's go in and just do a quick sweep here. If anyone's interested in what I think about the super high time frames, you can go back to my Monday pre-market on my YouTube channel, and we scrutinize what everything's going up here on the high time frames. If you guys remember back to last week and the week before that, actually I don't know if we were here the week before that, but you remember we were saying the monthly, the weekly, and the daily charts were all showing a lot of trouble as we tried to push to new all-time highs. And for a while now, we've been pretty sure, well, we've been not sure, let me rephrase that, let me start over here. We had clues that there is some trouble in this push, and we were expecting that there could be a pullback. The problem is, like I tell everyone every day, every time we expect a pullback, the bulls just jump in and rip it higher. But we've finally gotten the pullback that we're talking about, and we talked about two main levels below here in our, at least in my chat room. I don't remember if I mentioned this last week for you guys, but if we were to break through this major area here at 42.52, which was really important for us in our trade room, if you remember back to just a day or two ago, if we got through there, we said we had 42, just about 42.12. There was a really good support and resistance coming across there. And then down here just around, I said 41.50 to 41.60. Again, looking at a daily range, that's just a little iota of a single day there. So look what happened. We came down and bounced at 42.12.75. So we bounced 3 ticks in front of the level that we were that I mentioned, at least I believe, on the Monday or the Friday pre-market session there. So came right into it. Again, not surprising where we're finding all of the support and resistance in the market, because we have it laid out before we ever even get there. So came down, and now for the last 3 days, it's just been a complete, garbage chop fest in here. And it seems like every Thursday morning we come in and we're stuck in a sideways chop, and we're trading within 2 or 3 days of price action. It just seems to be the norm here when we come in on Thursday for kind of this general session and general meeting. So I don't want to read too much into these candles. Remember, when we saw this, it looked like there was a lot of potential that this could actually turn here, especially because it came right to our expected support, got this beautiful doji down, and it looked like we could get some recovery. Had an intraday just a couple, the next day, tried to break out, failed, and now here we are today, right? So it's kind of ugly up in here. And there's nothing from a divergence perspective that I need to mention over here. Essentially, we're stuck within, right, that range from 4,200 to 4,450 right in here. Plenty of opportunity, plenty of trading opportunities within the range, but pretty ugly from the higher time frame perspective. From the 4-hour, and honestly from the 4-hour and from the hourly, I don't think there's really much to add to the picture. All we really need to do here is map out all the interesting areas that we could expect there to be trouble in the market coming into the open, and then we trade around that, right? So if anyone was here for Ephraim's study session yesterday, or I'm sorry, Ephraim's training on how to trade prediction points yesterday, he talked about simplifying things, right? And in my trade room, we do look at a lot of interesting levels. We do use we use divergence. We're considering price action. So there's a lot of different things going on. But at the end of the day, all we're looking to trade are these interesting levels from one to the next, right? And we're looking for and anticipating those areas in the market where we could expect there to be some trouble. So if I was long, let's say from 42.62, looking above me here, I want to look for areas where we could potentially find trouble, because that's where I want to take some profit. Just to, assuming that I've got a good range to that next level, I'm going to take some profit just in front of it, just in case we do get some trouble. And you can see if I was to have bought down here around 62, we pushed up. My first area where I would have taken profit, or that was actually a pretty big range, so I might have actually been out of the trade at that point, was 20, 30 points to the upside to the swing low from the day before. And as you can see, we did come up into the swing low from the day before and get a major rejection of 20 or 30 points right off of it, right? So if I was long down here, I want to know where I need to take profit to ensure that I'm not going to have it come all the way back to me if there ends up being some rejection. Now, I've already kind of laid out this situation for today. We're stuck within 3 or 4 days worth of chop. So it just so happens that there are a lot of tight levels in here that very well could end up working as good support and resistance. So let's just kind of take a look at it from this larger perspective up here on the 60-minute. And had we have been here before this new bar formed, I would have been looking at this right here. This major swing low off of this candle here at 43.81, in my opinion, would have been the first area of trouble for this attempt by the bulls to rip off the lows of the overnight session here. So that would have been an area I would have been interested in, but as you can see, we've already kind of cracked through that. And this is a 60-minute bar. I'm not sure if we came right to 81, got a pullback, and then eventually bounced off and continued going through. But that would have been my first area of interest. Now what I want to do is kind of jump down into this 10-minute chart, and it's going to be busy. Trust me, you guys are probably going to think there's way too much on there. There are prediction points, and then we have the eye levels, right? So a bunch of levels, and then just the general daily high, daily low, 50% of it, and then our proprietary 50% line down here in orange. So there's a lot on there, but you have to remember the ranges in the market right now are so big that even though these look like they're like this is ridiculous, that's way too close together, I mean that's still 5, 6, 7 points, or 5 points away. That's a 5-point gap right there, but it looks like it's literally a few ticks away, right? So it's just because of not only all the chop we're in, but because of the ranges, these lines look much closer than maybe they would look if you're looking on your tick chart and you have some space. You can actually breathe a little bit, right? So just bear with me on the lines. Now we're pushing up into a major potential congestion zone here, just looking at prediction points alone, right? So these are my CPs all stacked really close together right in this zone, basically from that swing low I just talked about up into our eye level at 98. So that whole section there, for whatever it's worth, could potentially be some trouble in here. And then you can see going back how many times we've generally kind of stayed above this 98 area. So that's going to be important this morning, getting through this potential chop area, getting through 98. That's going to be the first thing on the cards for the bulls this morning. If they can get through there, we've got 15 up above, and then we're right back to 29.50. Remember, that's the level where we got a really nice about 15-point pullback right after the open yesterday. Very well could be relevant this morning again, and then right up to the previous daily high. So these are the main 3 levels I'm looking at coming into the open. If the bulls start ripping, and remember, it's not always and never really is just a straight line. You know, it could play around. We could have a major correction. It could pop around, but the idea here is once we get up into these areas, there's potential for there to be that rejection, right? So just be aware of those to the upside. And then on the downside here, we're going to take a look at this overnight leg. Again, assuming we don't break that high in the next 10 minutes, this is our fib for the overnight push from the overnight low. And you can see that the 61.8 is sitting right at our eye level here at 09. So first thing I'm noticing is both of my eye levels are exactly at the 50 and the 61.8 of the leg. And the 38 maybe isn't lining up beautifully, but just below it, we've got a CP, a prediction point, and an eye level sitting right there. So I'm just going to highlight this little section. We've got 34 to 36 as potential support down a little bit deeper. We've got the level here at 43.08. And then just in between all that, we've got this zone here from just about 43.48 to 43.50, which is going to be another potential area. And again, I have to apologize. We're stuck in a very choppy area with a lot of good relevant levels. There's just going to be a lot of stuff in here. So we've got 48 to 50. We've got this little zone around 34. We've got down into 43.08. And if it breaks through there, we've got this little area around 93. And you can see a lot of support, or I'm sorry, a lot of resistance right there coming off of, again, remember, the low of the day before. Once we broke through that, came back up, couldn't really get through it for a lot of the time in the overnight session and eventually broke through. We have not come back to really test that area, so that's really sticking out to me as well. And maybe even you can see over here all these wicks and swing highs off of that level as well, right? So there's just a whole lot in here. If the market does end up pulling back, there could be so many different scenarios, right? It could come right into the magenta line and bounce out. It could come down into 61 to 63 here and bounce out. And again, I'm looking at that one, and then potentially this one, and then down into this area and this area, right? So there's all these potential scenarios. These are just the areas I'm expecting there to be stronger support from. And then, of course, you never know if they're going to come right into our orange line and bounce out. If you're in my trade room, if you've been here even just for a few weeks, you would know how important that yellow line is, or orange line is. It might not look like from today's price action like there was a whole lot going on from that level, but I swear, if you just follow it every morning, you'll see how well. A lot of times the market on the upside will come down and bounce literally to the tick right into it, and have a reversal either to the upside or coming up from the downside. So that's always a possibility. So I wish we came into the market this morning and we weren't in 3 days worth of chop. I potentially have some better forecasting for you, and maybe some more what's the word for it, targeted levels for bounces. But because there are so many relevant things in here, it makes it hard for me to actually give you confidence in one level over the other here. There just is a whole bunch. Outside of that, if we zoom out, and I want to do this really quickly from the larger point of view. If we do hold, we don't break the lows of the overnight, we don't break basically the range for the last 2 or 3 days, and we do get up through the previous daily high up there at 46.25, we have some levels above to watch. And they're basically our major eye levels here. So we've got 74.50, we've got 96.75, another 20 points above that, and then another just above 20 points, maybe 30 points, 35 points above that, we've got that 45.27. There's one other level I'm seeing in here that we're going to want to pay attention to, and that is this swing low just in front of that major level, and that's 45.14.50. So I don't know if I can pinpoint it perfectly, but essentially right there, 45.14.50 is a potential trouble line. If they get through 96, that might be the level. It might not get to 27. Again, we're just looking at potential areas where we would expect that kind of stuff to happen. So let me get the actual number on there. and the swing low was 14.50. So we'll put that in there as well. And remember, these are essentially targets. If we're long and we get the breakout, I'd be wanting to take profit just in front of these areas in case we do get that strong rejection by the bears. So again, getting through 96 brings us to that 1450 swing low that was never tested. Notice we came down, got a strong push out of there back on January 20th, the overnight session, and never really came back to test the swing lows there. So be aware of that 1450 level. Wouldn't be surprising to see something happen there. And that brings us up just about, I don't know, 40, 50 points from where we are right now. If they end up getting through 1450 and 45.27, that then opens up, and let me just take a look at what we're pushing up into, that major swing low back here off of 78.75. And I think that's another almost 100 points to the upside. I know we could go 150 points in a day, but I think that covers everything to the upside. Let's take a look on the downside here. If we do break lower, I just wanted to bring up once again, if we do break through that 12 level, that opens up a whole bunch of room into 41.50, which is another 60 points below that low. So just keep in mind, once we get through 12, the major target for me is another 50, 60 points down. And that would be for where we are right now. I mean, that's another, almost 200 points down. So I don't know if we're going to get there today, but that's that major level I'm watching. So hopefully this kind of helps you guys orient yourselves coming into the market this morning. Like I said, there's just a whole bunch of crap in here. And from the larger perspective, it just looks like there's a million things, but at least on the tick chart here, you can see it's spread out. I mean, we're looking at, if it doesn't hold here, it'll probably come down into here, right? So, I mean, we've got a 10-point gap. If it doesn't hold 61 and the CP at 64, this little area, we've got another 10 points down to 43.50. So it looks really close together on the 10-minute, but once you zoom out, or once you zoom into the small time frames, you see that you've got a lot of opportunity between these areas to capture a pretty good sizable trade, if you were to hold your targets. So again, coming into the open here, we're not sure if the bulls are going to rip out to the upside or if the bears are going to jump in, but we have our levels demarcated and we know the levels we can expect there to be almost to the tick that turns in the market. The ranges have been a little wild for the last few days, so sometimes you have to be prepared for the fact that the eye level or the prediction point or something like our 200 or our VWAP isn't going to hold sometimes to the tick or within 2 or 3 ticks. Even though it does in so many instances, it still works. You can still play these levels with literally a point of risk, and a lot of times they do hold, but keep in mind, in the current context of the market, you're going to run into a lot more of these situations where it breaks through by, say, 3 points rather than the 2-point break that we typically see. So just be prepared for that. Again, keep in mind, the levels do, when they do end up hold within a tick or two, when they do work like that. You can see it over and over again, but there is that potential. And again, you basically can still keep a 2-point stop, and a lot of them work. But again, the grand scheme of things, it's a very, very wide range. So you might have to compensate for that. Maybe keep your instead of entering at the line, entering a few ticks below it. That way, you're giving yourself a little bit more room for that break. It's up to you, but that's just what I'm seeing here for the last few days. So I think that's all I have. I wish we had kind of a prettier market to work with, but it just is what it is. Maybe we'll come in one morning and we won't be stuck in 2 or 3 days of chop, and I'll have a better scenario for you. So I think that's basically it. The general idea here is if the bears pull the market back, we've got that 61 to 64 pocket. We've got the highlighted region here from 47 to 49, a little bit deeper into the eye level on the CP at 34, And again, there's always a possibility our major orange level there at 18 quarter holds, or down into '07 or '08. And then I'm really in love with this level right here. We got an eye level, we got the previous daily low there in green, and major resistance throughout the overnight session. So if this does pull back pretty deeply, I'd be looking at that level for a potential bounce. But to be perfectly honest, if we're selling off from here, I'd like to be short and taking my profit in front of there. You can play it both ways, right? So I think that's all I got for today. Hopefully that helps. And again, we'll be back here next Thursday. Well, actually, we'll be back on Monday. So on Monday, we'll scrutinize the higher time frames a little bit more. And yeah, I think that's it. If you guys have any questions, feel free to send me a message. And like I said, I run a trade room every morning. We do this analysis every morning. And I think anyone who's in the trade room can vouch. The levels we put on the charts, they work literally to the tick over and over again. So this morning, a lot of these levels, even though there's so many of them, won't be surprised to see some really beautiful action off of some of the levels we talked about. If you want to join us in the trade room, just give me a message and we'll get you set up. It's not a free service. This is a paid trade room, but I do think that if you're having trouble finding your rhythm as a trader, I'm here every morning trying to show you my process, what I do to be consistently profitable, and how I manage emotions, how to read the market, and literally sit here with you. And here we are live in the market, reading everything, showing you levels that make sense to hold. In fact, that was the first level that made sense to hold right off that swing high at 85, and we're now 5 points up. Right? So I try to sit here and help you find low risk areas in the market to put trades on, and also take some trades myself. So hopefully I'll see some of you over in our trade room, and I'm going to jump over to the member section and we're going to get started here and start looking for some trades. So see you guys on Monday. Take care. Have a great weekend.